So to me, when I see these, I ask the big questions like, well, why on earth are they selling me tokens instead of shares in the first place? What's wrong with the old-fashioned way of doing this? What's the benefit to me of owning tokens instead of shares? What's the benefit of them selling me tokens instead of shares? The second half of that is a lot easier to figure out because they think they're going to succeed and they'll take all the value of the company. So let's use Filecoin as an example to try and see what I mean by this crypto token question. The service that they're offering to the world is going to look a whole lot like Dropbox. So imagine Dropbox didn't exist. Imagine Box didn't exist, that this whole idea of cloud-based storage didn't exist. It was new. So imagine Dropbox and Filecoin launched on the same day. Dropbox, they launch, and you can pay them with a credit card, or you can pay them through PayPal or Venmo. And Filecoin, the only way you can pay them is by going to a crypto exchange and exchanging your money, your dollars, for tokens. And maybe you'd even run an exchange. Maybe even Filecoin will have an exchange, but you have to have an account and you have to stick tokens in it. Which one of those is the better experience? And we've seen this already. We saw this in the 90s. Would you rather have a monthly subscription to your cell phone provider? You pay them a flat fee, you get a bunch of services, plus maybe you get billed a little more at the end of the month. Or do you want to buy it by the minute? And do you want to have to worry about how many minutes do you have in the account and topping them off? And back then it was calling up the cell phone company and giving them the credit card number over the phone to top it off, or to pop into a store to top it off. Right? Having this extra account in the way that you have to keep topping off is friction that most customers don't want to deal with. And yet that's what these crypto tokens are in most cases. It's an extra account between your bank account and what you actually want to buy. And even worse, it's not denominated in dollars. So it's a token that has a meaningless value to most of your customers. So again, ask the companies, and if you're looking at ICOs, why would anyone want your token? What's wrong with the US dollar? The US dollar, it's accepted in like 198 of 200 countries in the world. Moving on, because that's not the only question. If you're buying these tokens, especially early, if you're the speculator that's buying the tokens because you believe this service will be valuable and people will buy the tokens from you, how do you ensure that the first people to buy the tokens are the first people allowed to sell the tokens? I just saw a company where they said, we're going to have only 500 million tokens ever. We're selling the first 100 million to investors. They called them investors instead of speculators, but they're speculators. And they're going to sell them for, let's just say, $1 a piece. Okay, that's $100 million if they succeed at this. But the company has 400 million tokens. And there was nothing in the presentation, nothing in the pitch that said, we're going to guarantee by contract that you can sell your 100 million tokens to our customers before we sell our first token, the first unsold token to a customer. That wasn't there. There was no promise given like that. So what protects you from the company simply saying, oh, yeah, you guys, I remember you guys, thank you for what you did. Yeah, we'll sell 9 tokens, you sell 1. Or again, like I said earlier, you know what, we're a little bit like Zimbabwe. Thank you for the $100 million. Now, your $100 million of tokens, yeah, in fact, yeah, we're going to sell ours for half of whatever you're going to sell yours. Whenever a customer comes along, we're always going to sell ours for half whatever you offered yours for. You'll get out someday, but not until we have made, $200 million of sales selling the rest of those tokens. How do you protect against that? Well, if you owned the company, then you'd be in alignment, right? If you were buying equity in the company instead of buying these tokens, well, then you would want them to go do whatever it took to make as much money as possible. But as soon as you buy their tokens instead of their equity, you're now not sitting on the same side of the table as them. You're sitting on a different table, and you're just hoping that they come by to your table and let you play. And lastly, just to end this rant, does the product even exist yet? So if a company came to you with that idea and asked for equity, would you say yes? And if the answer is no, because you don't like to speculate with idea stage companies, then why are you doing it when there's a token involved? Is it because they're telling you you're going to make 100 times your money? Right? Is it really just about the money? What was the leap of trust that got created because there was a crypto token? And so I go back to every one of these I see, And my first question to them isn't the cash question and everything else. Actually, my first question is, why don't you just do it with Ether? Or why don't you just do it with Bitcoin? Like if you like cryptocurrency, skip the ICO thing. Why don't you just launch your product right now? Like get an MVP out there. And why don't you take Ether or crypto or Litecoin or any of the, there are companies that let you take 100 altcoins, right? Just like PayPal will let you take dollars and yen and euros. Why don't you just put the service out there and charge people in cryptocurrencies? You're a cryptocurrency fan, right? And usually they don't have a good answer because usually when you look at it from their point of view, the reason they're doing the ICO is because they're promising 20, 30, 50, 70, 100 times your money back, and they don't have to sell a shred of equity to do it. And if you look at a lot of them that I guess are in between 1 and 50, or maybe they culled it off the list, you'll actually find from 2017 a whole bunch of companies that did an ICO, and that's the last those investors ever heard of the company. Website went down, whoever the founders were disappeared off the face of the earth because they didn't actually sell any equity. Yes, that's still fraud. Yes, they could still get caught and thrown in jail. But what they do, they sold them a token for a service that doesn't exist with a promise that someday it would. And they could always say, yeah, we're still working on that. It's coming out next year. You could always say it's coming out next year. And that happened hundreds of times, not once or twice. That happened hundreds of times. That doesn't happen hundreds of times out in the world of angel investing and VC investing. It happens occasionally, but not hundreds of times in 1 year. So I would just warn you, if you're going down the ICO route, to not let blockchain and crypto put some rosy glasses on your face. To actually ask extra questions. Now that you know something about cryptocurrency, now you know something about blockchain, ask some extra questions about why they need the blockchain in the first place, why they need the tokens in the first place, why they're not raising money, and why they're just not charging dollars. And if you have any other questions on this, you can come and find me at lunarobiscuit.com in the contact page, or even better, post the question on Quora, Quora, and you can ask me to answer it. I have an account up there. It's Looney Libis. I love to answer those in the public so everyone can see them. See you there.